Hey guys, this is Market Update. Things are looking very, very good for the rest of this cycle. The market is set up really well for the next phase, but I think a little bit more patience is still required. People are desperate for October. They're desperate for that big move so they can take their profits. I don't think we're going to get that this time. We also have an election coming up, and the market really wants to know the result of that, I think, before the next move, because essentially it's chalk and cheese. You have one side extremely pro-crypto. It's part of their plan. The other side essentially wants to ignore it, and we've had a 4-year war against crypto from that side. So it's pretty clear that it's a kind of binary thing, right? If one side gets in, I think you get animal spirits again. If the other side gets in, people are wondering what's going to be happening. So that's the way it is specifically towards crypto. However, it doesn't really matter who gets in long term, because currency must be debased. And I'll show you that towards the end of this video, that there is just no other option than currency debasement, which means our risk assets will go higher. I don't think we're going to get the 2020 rocket ship again. I think we're going to get a much more normal market, actually, which is choppy trade, parts of the year where it goes well, other parts where it just goes sideways and down, which we've seen for the last 8 months. I just think that's what we're in. However, I do see that second phase coming, maybe this or next year. And so definitely have to still be in BTC here, buying anything under 70, 75, because I think that next move is coming. If you do trade, check out Bybit down below. If you don't trade on there yet, you can get $30,000 deposit bonus via that link. Set up, make a deposit and trade on there with that bonus. I trade on here all the time, so check the link down below for the details. We are certainly in a bull market right now. Not just the price that we're trading at, we're underneath all-time highs, but the length of time that the market is trading here, it's really, really positive, because you've got 8 or 9 months of trading around 60,000. Right? That's just never ever happened before. We got up to 69,000 in the previous bull market, but it couldn't sustain it there for any period of time, right? Very immature market still, right? Huge move, but broke down from that. Trading at 60K for this period of time is obviously very, very positive, because the market is telling us, yeah, we're happy to trade this asset at this price, right? For an extended period of time. You're building the base of holders at this price. Just the same pattern as happens in previous bull markets. And you make a base, you move higher as new entrants want that. Profit taking is not very high. It's not typical of the top of a bull market, right? When you see a lot of profit taking here, that's the new entrants coming and saying, I want Bitcoin now. Price gets too high, market can't sustain it, and it pulls back. For right here, the market is sustaining 60K, which is very, very positive price action. You can see here as well, again, this is a short-term holder, SOPR. So this is over the short term, this is this bull market. When the SOPR gets very high, what it's saying is market's a little bit overdone, right? Again, buyers are coming in, pushing price up. It's maybe a little bit higher there. Market wants to pull back and create a new base, right? Kind of new price action. So essentially in bull markets, which we're in, if you see the price action pull back, obviously you buy dips, right? If you want to do that. You can see the asset maturing, right? So if you just want to dollar cost average into an asset, you have savings, you want to buy a solid asset, this is the best one, right? All the data shows more people want to buy it. Once they start buying it, they store more value in it over time. It is a store of value. It's literally the trade of our generation, this strong, desirable, solid asset that is just monetizing and people are putting more wealth in it. You can just see it, right? So maybe think longer term here. Don't trade it, buy it, hold it for as long as possible. If you see that we are at the very, very peak of a bull market where people are coming in paying the wrong price for it, maybe you can take your profits there, right? It's not happening right now. I think there is another leg to go in this bull market. The reason why I often say that Bitcoin is a sweet spot trade or the trade of our generation is because all the planets have aligned. Everything has come together in this one asset. So you have this invention of worldwide desirable property rights, essentially, right? Worldwide money. It's a desirable financial index to save money in. The S&P 500 is really the benchmark for savings, long-term savings, 10 to 12% a year. And if you go to a hedge fund or anything, they're going to try and outperform the S&P. They're going to take more risk. They'll try and outperform it. Okay, that's great. The vast majority of returns don't come from the actual thing that you're investing in. They come from the debasement of the fiat currency that you value it in, right? And you can see that here. All the planets have aligned. We have this invention of worldwide desirable property. It can proliferate to a much wider audience than the S&P 500, right? You need an exchange account. You need to be able to buy it with dollars, etc., right? Not everyone can do that. Not everyone can work for the S&P 500 and save their money in it. So we have this invention of that. Bitcoin could be as big as gold, real estate, right? Huge asset classes. So you've got that. But Bitcoin is new and small and still has huge outsized returns versus all these things. So you can just buy it and wait to outperform. And actually, in 20 years' time, it's going to be super boring, but everyone will desire Bitcoin and you can put it in any bank or do anything you want with it. That is the sweet spot trade. The other sweet spot trade, the other planet that has aligned here, is that the vast majority of returns come because of currency debasement. So you can just buy BTC and wait for the currency to be debased. The S&P's gone up 6,000%. It's actually 600% inflation adjusted. Great wealth creation in the S&P 500, but let's not get it twisted. The vast majority of returns are because of currency debasement. So Bitcoin is the antidote to currency debasement. So that's where all the returns are. It's the sweet spot trade, a small thing growing into a much larger thing, and it is taking these returns from the currency that we sell to buy it. It's all aligned in BTC. It's the trade of our generation. When looking at Bitcoin cycles, then what we're also looking at really is the fiat currency cycle, because we don't want to get caught at the top, right? We don't want to put too much in the top and then get drawn down on 50%. And if we are looking to take some profits to improve our lifestyle, we just want to make sure that we know more or less that we're kind of at the top of a bull market. We don't want to sell too early, etc. So I get that. What we're actually looking at, though, is fiat currency cycles, because everything about the dollar price that we will look at is essentially controlled by the Fed, right? They raise interest rates or they cut interest rates. They put QE in or they take QT out, right? So they control the supply of dollars, and therefore other things move in relation to that. But really, if you're a long-term saver, you just look at price of goods and services valued in BTC units, and that's it. The fiat currency cycle is actually what we're playing. Central bankers and governments and banks create all of this credit, pushes credit units into the economy, and we have to value everything in those credit units because of legal tender rules. Everything goes up in price because there's more currency units. Everything goes up in price faster than we can push our wages higher. And then we all get annoyed and say inflation is too high and we're going to vote people out. And so they pretend, and they have to pretend to actually draw it down again. And they make us all unemployed so that we don't have the resources to challenge them, and we get back in our boxes. And that's how it goes over and over and over again. Essentially the debasement of our labor. This is the euro since it started, complete nonsense. Credit currency units cannot store value over time. They are designed to debase our labor. So we need to be out of those completely and into savings. S&P, NASDAQ, BTC. It's the same the world over. It doesn't matter which country or which monetary system. It's exactly the same reaction all the time, which is when the economy tries to disinflate itself, which is actually create wealth, bringing prices lower, creating wealth and abundance. They will always step in and not allow that to happen. The debasement of currency will always happen. We've seen the stimulus coming out of China now. Stimulus to create inflation, to debase labor. That is the trade of anyone's life, is to make sure your labor doesn't get debased. Purchasing power of the dollar. This is BlackRock now telling their clients and putting up these things which we've been looking at for years and years with Bitcoin. So it is the trade of our generation, right? It's right here. We're in the sweet spot, and it's proliferating to all institutions who want to bring this asset on. We got in early, and we're still early right now. We've still got a lot of growth to go in BTC. We have to look at currency debasement then, and the rate of which that happens, because if that will happen at a faster rate, or if it's likely that this currency debasement will actually speed up or take place, then obviously you go into assets that will price that in. BTC is the way to price currency debasement, I think, for most people. Now, the other way to play this is actually to play government bonds. And that's what hedge funds usually do because of the size of this market. You know, you can go in with huge amounts of size and liquidity. So Stanley Druckenmiller here, right, he's saying he's short bonds equivalent to 50 to 20% of his portfolio. Now, what he's talking about is probably the longer term bonds, right? So actual bonds and not bills. Bills are probably going to go up in price because the central bank is cutting rates, right? So cut interest rates, price of the bills goes up. For bonds, though, longer term, what Stanley Druckenmiller is saying, right, one of the best traders ever, right, he's saying that essentially the fiscal situation in the States is so dire and it's getting worse and worse and worse. And that means that more currency units have to be created in order to pay for the interest on the previous debt and all of the other unfunded liabilities. And that means that more debt creation means that essentially you're going to have to be selling these bonds on the market. Price may go down, interest rate might go up a little bit. So you short those bonds. Now, that's the hedge fund way to do things. I think the positive way to do things for individuals is to, be positive, Don't be a trader, but save in a strong, desirable asset, right? BTC, S&P, NASDAQ. I'll be making a big update this autumn for the Crypto Investor course. I'll link it down below if you're not a member yet. If you are a member, that's coming free for you. There's a lot of work on currency debasement and the current cycle that we're in here, because we're getting into the mid stages. And so it's important to know what we should be doing over the next 6 to 12 months. Links below to Bybit as well for the deposit bonus there. I'm James, this is ManagerDG. Cheers for watching, and I'll see you in the next one.